All right, welcome back to the Global Business Report here on Arise News. We're going to be talking about angel investing for startups, tech startups in Africa. But let's look at this data from Nairametrics. Funds raised by African startups as of August of 2025, 187 million by 39 startups. Top 10 attracted 167 million. South Africa accounted for about 55% of that total, with a $93 million deal in the Ikoka, which I think was acquired by one of the big banks in South Africa. So, well, is that really angel investing? We're going to get into that plus more with Yemi Keri, who is the president of ABAN, which is the African Business Angel Network, and the co-founder of Rising Tide. Also the CEO of Hackerbella Limited. She sits on a number of boards. She's a technology executive, well sought after thought leader in the space. Thank you so much for joining us, Yemi. Thank you. Welcome to the show.
Me.
Now, so those figures, I mean, it's not tech. I think it was more maybe venture capital. I know angel investing starts from very early, but what do you make of the figures in general?
Well, these are figures whether the VCs and M&As really, and these are funds that have been raised by African startups, right? Generally, they would have matured across the value chain and would have spent the test of time over the years for them to be able to get into the VC space. So that's what this is really talking about.
Fantastic. All right. But I guess, are you encouraged by the money that they're raising still, as far as the African continent is concerned, or it could be higher, or what's, are you encouraged?
We are very encouraged.
Yeah.
You see, as angel investors, we invest very early. So we take the risks, right? And so when we begin to see these numbers and we begin to see how startups are growing and maturing over the years, whether they're going into acquisition and measures or IPOs, or even when they're raising Series 2, Series 3. As angel investors, we pride ourselves for having taken that first step in believing in those startups and for them maturing to this level.
Fantastic. Now, speaking of that, maturing to this level, before they get there, there's, of course, pre-seed rounds.
Yes.
ABAN has released, well, as of 2024, had this survey on the angel investing on the continent. And I did want you to speak about the fact, this says here, angels play a crucial role in the early stages of startup development. And I'm seeing here that, you know, as of, with this chart here, 40% is pre-seed. Because can you talk about the importance of angel investing and how this, you know, stacks up?
You know, when you're looking at the growth of businesses, of startups, it is as an effect or an outcome of the angel investors having invested in them, having taken the chance, having looked at how they can really support these businesses. So whether it's pre-seed or seed or earlier on, what we are doing is that we are investing in startups in their very early stages, when you know that what you are investing in as an angel investor, that product may not be the eventual product at the end. Policies and governance can change. Socioeconomic, macroeconomics can change and affect this. So we are really, as angel investors, investing at the very, very risky stage. We say we invest in the valley of death, because at that point, a business can either move and go into the growth trajectory or die.
Gotcha, gotcha. All right, next chart here. Let's talk about money. Let's talk about checks that have been written. I like this chart. Shows 2022, 2023, 2024. Can you talk about, I guess, how the amounts of money, because we're starting here from 1,000 to 10,000, going all the way to over $500,000. Can you talk about how the growth in the actual amounts written for these angel investors, how that trajectory has improved?
It has really improved indeed. Why? Is because the angel investing ecosystem is building and is growing. It's evolving. Time was when you would invest 1,000, you know, small tickets here and there, testing the market, and in the early stages of angel investing on the continent as we know it. But as time has gone, people have started to come together, whether as syndicates or as networks. And so they're investing collectively. So I'll give you an example, Rising Tide. In 2018, 2019, we were doing small tickets between 1,000 and 25,000. As the network began to grow and more investors put their money behind a particular startup or a deal. And as such, the ticket size increases. So across the continent, there are now more and more angel networks or syndicates or clubs, as they're known, that come to collectively invest, and therefore the ticket sizes are increasing as the years are increasing and the ecosystem is maturing.
That is encouraging. That is very encouraging. All right, there's still more from this report. This looks at how angel investors are. Yeah, I'm glad you mentioned rising tide. So we've got, again, 2020, 2020, 2024. Syndicates, angel network, using a combination of methods on my own, deciding to just invest on my own via a startup funding program. Can you speak to the avenues or the channels through which angel investors are connecting with startups to give them this money to support them?
These are structure.
Yeah.
Angel investment is structure. Time was when your cousin or your uncle will ask you for money for a business, and you'll just give them the check. That is angel investing, right? So you're doing it on your own. Sometimes you're looking at what would be the benefit for me at the end of the day, and sometimes you're not. As the ecosystem has begun to mature, people have started to move from doing individuals investing to collective investing, hence the networks and the syndicates, right? And then some people use a combination of methods. So Lagos Angel Network has a deal and says, okay, this deal is good. The founder is a woman. Why don't I pull in Rising Tide? Right? And then there's co-investments. And then there's also the ones that they want debt or equity, right? And not only equity alone. So you have a combination, who is interested. And so it's different methodologies for different, then you started having technology, the use of technology inside to support the process, whether it's by doing the due diligence and so the Angel List, for instance, has deals on their platform, and what people go and do as an angel investor, you go and look at the deals that have been curated, and based on that platform, you then invest. So do we at Rising Tide, we use a platform called SI Fuse. So there are different ways and methods in which you can decide to do your own investment.
Fantastic. Thank you so much for that breakdown there. Okay, up next, I really want to get your thoughts here, because this looks at what the startups are involving, sectors, if you will. So there's fintech, agriculture, agritech. Now, I notice here the longest bar is sector agnostic. So it suggests that they don't really mind which sector it is, but maybe you can use Rising Tide as an example. Which, based on this chart, are they really just, doesn't matter what they're invested in, I'll just put the money there, or fintech? Because I thought fintech was a leader for quite a while because of payments and so on. So what's your thoughts on
Actually, it depends on the investment philosophy of any angel network.
Right.
For Rising Tide, we are increasing women's participation in angel investing. So we are a network of female investors. And we are supporting female founders, trying to close the gender funding gap, right? And so we're not looking at agriculture, or we're sector agnostic.
Gotcha.
A woman comes, female-owned, female-led, or gender-diverse businesses, we will try and invest in them. So investment philosophies are very important. But then, more importantly, is that people try and invest in areas where they have the subject matter experts, right? So if my background is agriculture, my tendency is that I would invest in agriculture. And so you have the agri-tech and then the edu-tech, right? But the fintech, one of the critical things you would notice about the fintech is the fast growth of it. For agriculture, you need patient capital. Right. For education, you need patient capital. So depending on what appetite you have as an investor, you would then look at how you want to invest in different sectors. But there are a lot of people that are investing in fintech because the technology allows for a fast-paced growth. And so your values and your returns are shorter than all of the others. But then certain investors would want to look at impact.
Right.
When you're looking at impact, you're looking at healthcare, you're looking at education. So it's the different appetites of the investors.
Gotcha. All right. Now, so I think this is okay. This is still on the same topic. I think we're going to jump ahead because you just mentioned impact, and I did want to ask you about that. So if we jump ahead to I think we have another chart which talks about impact. Perfect. So this shows as far as social, what they're looking for, or what they're looking to, the impact they're looking to have. I see social impact here, economic impact, and environmental impact. So you mentioned impact. Is this, are they just wanting to change, you know, like women, you're talking about getting more women in there, or wanting the economy to improve? How are you viewing the type of impact that these angel investors want to have when they're writing these checks to these particular startups?
You know, as a continent, and as founders, they solve for problems. And a lot of, you know that the continent has a lot of problems and a lot of challenges. And that is what the founders are trying to do. They solve for problems. Now, the problems would fall into social, environmental, as it were. But when you fast forward, after solving for your problems, then the economic outcomes come in. Right? And so when you look at the growth and evolution of angel investing, or even investments as it were, it always translates for successful ones into economic outcomes. Right? So as a founder or as an investor, I could then say I really need to take the issue of healthcare seriously. There's a company, WADA, in Tanzania, and what they were trying to solve for was just solve for dispensation of medication and its mobility. And today they have $6 million in revenue. They have solved for the social problem, but the economic outcome has come. Right? And so for a lot of other organizations, financial inclusion, Money Point, and then today they have the economic outcome. So it's not mutually exclusive, right? One tends to lead to another.
To the other. We're in October now. I understand there's an event you have coming up, which is about Africa Must Fund Africa. I think that's the tagline.
Yes.
So, I mean, but look, a lot of startup founders, I just talked to one, I met him a few days ago. He's flying off to America to go raise money. So talk to us about this, the tagline about Africa Must Fund. Do you think all the funds can be gotten from the continent, or are you saying we should exclusively focus on funds from Africa, or still get funds from overseas? Talk to us about that. This Africa Must Fund Africa.
You know, Africa Must Fund Africa, you've been hearing it from different perspectives throughout this year. And the realization is that if we do not put our own foot forward, then nobody from the West will not come. The funds that they're looking for that are in the West are predominantly looking for de-risked investments, right? If we do not fund Africa, or if we do not fund Africa and look at the future, the money from the West will not come. Flutterwave, we took a first hit. Paystack, Money Point, all of the unicorns, the angel investors had to put their money in first for it to be attractive for the global economy. And therefore, we are saying that we have more opportunities. And we as Africans, we start to look at how we can raise local capital to start to invest in all of these founders and solve all of the issues that we have on the continent before they can go and then start raising. Let us not start waiting for global funds to come and dictate to us based on their own terms how they're going to issue us the funding, right? It is important that we understand that if we do not take that first initiative or that first step in believing in the solutions that we are providing and investing in all of these founders as local money, the rest of the world will not come in.
Gotcha. Look, we have to have you back first off after the event is done. We want to talk to you about what is going on with the Angel Investing Network, because we believe this is a very crucial initiative. What you folks are doing over at ABAN. Yemi Keri is president of the African Business Angel Network, CEO of Heckleberry, co-founder Rising Tide. You wear so many hats. Thank you so much for joining us on the show. Appreciate your time.
Thanks for having me, and I hope we see you guys on the 17th and 18th of October at the J Randall.
We will check it out. We'll be there. All right.